I'm going to be going over everything you need to know about using your VA loan to buy a multifamily property in about 10 minutes. And multifamily properties obviously can be a great way to build wealth, retire early, as well as set you up for bigger and bigger deals. Once you do a duplex or a 3-unit or a 4-unit, you typically have that comfort level to then take on an 8-unit, a 10-unit, a 20-unit, and on and on and on. So it's pretty exciting stuff. And a little background on me, I currently own 5 multifamily properties, and I've worked with a ton of VA buyers. Okay, so the VA loan requirements states that the property has to be 4 units or under. So a lot of people typically buy like a single family house, maybe a condo, townhouse, but what people don't know is you can buy a duplex, 2 units, triplex, 3-unit, or a 4-unit property. Anything 5 units or above is considered commercial, and that's like a whole different type of loan. And obviously the ideal scenario would be that you purchase a 4-unit building. I always recommend going for more units rather than less units, just because the economies of scale are a little bit better. But if you can find a 4-unit building with, 1 unit vacant, at least 1 unit vacant, you could live there and then have the other 3 units basically pay your mortgage. And sometimes you can live for free or even get paid to live there every single month. And if you think of that over the course of just a year, because the VA loan does require that your intention is to live there as your principal residence for at least a year. If someone's covering your entire mortgage for an entire year and you're building wealth through multifamily, how much money could you save over the course of that year? By the end of that year, or even if you live there for 2 years, let's say, you will have a significant amount for a down payment on potentially another, multifamily property. Maybe this time you go after like a 10-unit or, a larger property. And what's cool about buying one of these multi-units is that your VA lender is going to use a portion, usually 75% of the rental income of the other units to help you qualify for the loan. So even if it's a duplex, you have someone else living there, they will use 75%, if they're living in the other unit, they'll use 75% of that rental income to help you qualify for the loan. So that's why I always recommend, the more units, the better. But at the same time, sometimes you can get a steal at a duplex, whereas, the 4 units might be overpriced compared to what they've sold for recently. So you kind of want to just evaluate the options. The next requirement for your VA loan is that you have to be an eligible veteran. So you have to have what's called your Certificate of Eligibility, COE. And if you didn't serve in the military, obviously you're not going to be qualified, for a VA loan. If you didn't serve in the military, you should look at FHA because it's somewhat similar. You can still qualify for up to a 4-unit property with similar criteria as the VA loan. However, one thing that's interesting about VA loans is that they're assumable, and they're also assumable by by VA people as well as non-VA people. So I was actually looking at a 4-unit building where it was a VA selling it, and the interest rate was amazing. There wasn't a ton of equity in the property, but I could have basically overtaken those payments. I would have had to qualify, through the VA process without being a VA. So just, credit and income and that type of thing. But I could have gotten into a very low monthly payment with a neighborhood that had a ton of potential to appreciate. And especially now with interest rates going pretty high, I see a lot of sellers offering, sometimes VA assumptions where their interest rate might be like 2.7 or 3.0. And the thing to know with that is that assuming a loan can take a little bit of time. It can be a great option, so you should definitely look into those. You can have your real estate agent pull up basically all the properties that are offering VA loan assumptions. But the thing to realize is that you will have to come to the table in cash with the difference between what the VA loan is and what the current value or asking price of the property is. So I had somebody looking at a property, let's say it was like a $500K house, and the VA loan was, up to like $400K. And it was a great interest rate, but my buyer would have had to bring like $100K to the table to satisfy that loan. The next VA requirement is that it has to be your principal residence, and you have to move into the property within 60 days of closing. So sometimes you might buy a VA property that's like livable, but maybe needs a little bit of work. So then you spend those, those 2 months fixing it up, and then you're required to move in there within 60 days after you close on it. And even if your plan is to buy this 4-unit or 2-unit or 3-unit to eventually rent it out, full time, you do have to live there for at least a year. And there are people that check on these types of things. So you don't want to, there's basically mortgage fraud if you were to just purchase it and use it completely as a rental property on like day one. Now, after a year of using it as your principal residence, you can completely rent out, all the units. And then maybe you purchase another multifamily, maybe you purchase something else, but you do have to wait a year. Now, if you're in the military, obviously, your situations can change. You can get transferred, you can move somewhere else. So in that scenario, you would be allowed to rent it out, but always check with your lender and, confirm what information that's needed and confirm what's allowed. Because each lender is going to have like slightly different requirements. The next requirement is going to be cash reserves. So typically with VA loans, if it's just like a single family house, they're not going to require too much cash reserves. And again, every lender is different, so always confirm with your lender. But if you're purchasing a 4-unit, it's going to be a little bit riskier for the lender. So they want to see at least 6 months of payments, of monthly payments that you have. And this can be in the form of like a TSP account or different types of savings accounts. They basically just want to see 6 months of cash that you could potentially access if you needed to. The next thing you need to know about VA loans is the loan limits. So depending on what area you're in, the loan amount that the VA is willing to do will vary drastically. So if you're in like Topeka, Kansas, and you're looking to buy a duplex, they might only be willing to lend up to like, let's say 400,000 or 500,000. Whereas if you're in like San Francisco, the loan limits are going to be significantly higher, 2-unit, 3-unit, 4-unit. I'll put a photo of the chart, but you might be able to go up to like 1.2, 1.3, 1.4. It's going to vary drastically depending on the price range in your city. So before we talk about down payment, if you're a VA buyer and you're looking to do this, reach out to me. I have a short form below where you can fill it out and tell me a little bit about the property you're looking for. I'm an agent in the Washington, D.C. market, but I also have resources and recommended agents pretty much nationwide, as well as lenders that do these types of deals. So what's great about VA loans is that they do not require a down payment, 0% down. Now you can put money down if you want to, if you want a lower payment, but you don't have to put any money down. And so in a perfect world, you would basically purchase, a 2-unit or a 3-unit, 4-unit, not have to put any money down, and then make money every single month from the different tenants that are basically covering your mortgage. The VA does, however, have a funding fee of, it's going to vary, but it's usually about 2%. And that funding fee basically goes to insuring these different mortgages. But what's cool is you don't have to pay PMI. So typically, like if you're putting less than 20% down, most lenders are going to require you pay PMI, which can add up. That's private mortgage insurance. Because, the less money you put down, the riskier it is for the lender. So like an FHA loan, you only have to put down 3.5%, but then you have to pay PMI. And I have an FHA loan right now. I'm paying about $350 per month in PMI every single month. And it's about like a $500K 4-unit property. So the PMI is pretty substantial. Luckily with VA, you don't have to pay PMI, but you do have to pay this 2% funding fee. However, what you can do is you can ask the seller for a seller credit. So maybe you pay full price for the property, but then you ask them to seller credit of 2%, 3%. And then that seller credit can basically cover your entire closing costs. I think it's capped with VA at 4%. Again, always check with your lender. So you can't be like, okay, 10% seller credit and then you get money back at closing or anything like that. But they could basically cover your entire closing costs so that you wouldn't have to bring anything to the table. As far as credit score requirements with VA loans, most lenders will say like the absolute minimum will be about like 580. However, it's strongly recommended to have, to improve your credit as much as possible, ideally like 620. And then, in a perfect world, your credit score would be, like mid 700s, 760, 770, or even 800. But they do allow, lower credit scores, which is nice. As far as income requirements for VA loans, they typically want to see a debt to income ratio of no more than 41%. And basically when you're buying a house, you should always try to improve your credit, pay down as many debts as possible before you apply for a mortgage. And you do want to apply, you want to get the pre-approval done usually like 3, 6, even 12 months before you're ready, just so you have an idea of what you can afford and then what you could potentially work on. And, maybe you pay off some debt, improve your credit score a little bit, and then you can get a better rate or even get approved for a higher amount. In terms of interest rates, VA loans are actually great. They usually have lower interest rates than conventional loans. And an interesting thing to note is that VA loans have the lowest rate of default as well. So from the lending side of things, it's a great loan product. These types of loans are less risky for the lender, so that usually correlates to a lower interest rate. Hard money loans, when I do some investing type of hard money loans, which are like 10, 12, sometimes 15% because they're short term, they're riskier. So lenders, they'll do them, but they have to factor in that risk. Let's talk about the VA appraisal now. So VA appraisers are going to be a little bit more strict than a conventional loan, but they're basically just making sure the property is in like livable condition. They don't want a VA to purchase the property, a veteran to buy the property, and then it needs a complete gut renovation or anything like that. And usually an appraisal is about $500 to let's say $1,000, and it can take a few weeks. It can take like 2 to 3 weeks depending on your bank. And the VA appraiser, they're going to go through the entire property and make sure it's in livable condition. So you got to have like appliances. There's like, they have handrail requirements. There can't be like broken windows or, usually it's more egregious types of things. And if you're buying a property that needs a little bit of work, the VA appraiser might come back and say, okay, these 2 or 3 things need to be done before closing. Maybe I had a deal one time where there was no refrigerator. So we had to get a refrigerator in there before closing for the VA to approve the loan, or it needs handrails, or, the broken window needs to be fixed. So you might have to do those types of things before closing. But at the same time, it doesn't mean that these things are like a complete deal breaker. It means that you and the seller have to negotiate, who's going to fix these. If it's just minor stuff, maybe you say, look, I'll just send my guy over there and fix it. If it's something more major, then maybe you work out some type of negotiation that works for both parties. First-time home buyer requirements. So with the VA loan, you don't have to be a first-time home buyer. You can have 5 other properties and then use your VA loan. Just think of your VA loan as like an eligibility, and if you haven't used up that eligibility, then you still have it available, regardless of the other properties that you may or may not have. And that's what's cool about VA loans. So you could purchase a 4-unit property, and then after a year, you could refinance that VA loan on the 4-unit into a conventional rental property loan, and then repeat the process, and then use your VA loan to buy another 4-unit. And every single year, if you did this for like 5 or 10 years, you could build a massive portfolio. And to add on to that point about using your VA loan more than once, you're basically, when you get approved for a VA loan, it's called an entitlement. So let's say you have a VA loan entitlement of $700,000, and then you use your VA loan, but you only purchase a property that's $600,000. Let's say you would still have $100K of that VA loan that you could potentially use on another property. And again, always check with your lender, because they're always going to have different criteria and things like that. But it's something to keep in the back of your mind. Another benefit of VA loans is what's called VA streamline refinancing, and that basically just allows you to. It's just a significantly easier refinance process. You don't necessarily need to show income. I don't think they care about credit too much. It's basically like, if you can show that this refinance will save you money every single month, the VA will typically, approve the refinance, or the lender will approve the refinance. So most refinances are like very difficult, maybe not difficult, but it requires a ton of paperwork. With the VA streamline refinance, it's just like the way it sounds. It's basically a streamlined process to get you a lower monthly payment. How long does it take to close on a VA loan? A lot of people think that VA loans take like months and months to close. However, I know lenders, local lenders, and reach out to me obviously, that can close in like 2 or 3 weeks, a VA loan. So it really depends on the lender, and it depends how fast you get them the documents and everything like that. If you're working with like Bank of America or some credit union, it might take like something like 45 days. So that's why, if you're making an offer, always have them say, look, we're working with a local lender, and they say they can get this closed in 3 weeks, and that's going to make your offer a lot more attractive. So if you're a buyer looking to use your VA loan to buy multifamily, reach out to me below. I have a short form you can fill out, which just tells me a little bit more about your house search, and then I can put you in touch with the right person. I'm in the Washington, D.C. market, but I have recommended agents nationwide that would love to assist you. So thanks for watching, and I'll see you on the next one. Bye.